Okay, hi everyone. Um, I'm Hadass from the Popular Investor Program. I'm not sure you can see me. Don't know why, but it's fine. You don't have to see me. So I want to just welcome you all to Zach's quarterly call. You all know him as Fund Manager Zach. Yeah, I'm sure it will be productive and interesting as always. So Zach, you can go ahead.
Okay, hi everyone. Good afternoon, good morning, good evening, wherever you're calling from. Thanks for joining us today. And before we start, just want to thank you guys for the privilege of doing this. I really appreciate it. It's late in the evening, but I can't tell you, I'm still pumped up to do this because I really enjoy finance, and yeah, I'm just gonna get into it. So I will do a very, very quick intro because I have so many slides to get through today, but it's okay. Okay, so for you guys who are first time here, I'm Fund Manager Zach. I have all these qualifications, but I don't think any of it matters because yeah, the finance is complicated. It's a complicated system, right? So having qualifications is great. Learning how to apply them, different story. Okay, so why I started on eToro is really because when my dad passed away. This was like 10 years ago or something. I couldn't really get good financial advice because everyone was trying to sell me something. So I thought eToro was the perfect solution to this because what happens is I have to treat your money like how I treat mine. And that really solves a lot of problems by just having skin in the game. So that's why I do eToro, and that's why I love it. Okay, so I think it's really important that when you copy me, you just continue doing your job because we all have jobs, we all have families, we all have lives, and not everybody's good at finance. I don't think it's something that you should like have to learn and study and all that. So yeah, this is kind of why I do eToro. Okay, so yeah, so what's not important is number of green months. Like everyone wants to see the market going up and to the right, but as you all have seen this year, it's not possible. No matter how good you are, there's going to be red. And it's painful. I do agree, but we have to take what the market gives us. We don't try and overreach and take unnecessary risk. And my portfolio is usually contrarian, so when everybody's buying, I tend to be selling, and we'll get into some of those details later. Okay, I gave a very brief introduction. If you guys want to hear more of this, see my other quarterly calls. Okay, so I kind of came across this article. It's a very old article, but I do feel it sometimes. I think some people are having stock market anxiety syndrome. They just worry about their portfolios every day and every night. And I understand why it's a big part. I mean, especially if you put in a decent amount of money in eToro, it can be very painful. So I do understand. I'm hoping to take that burden as much as I can away from you guys, but yeah, it's part of the markets. You will see red days. Okay, so I'm gonna review where we are today, and then biggest disappointments, and then greatest, I guess, great gains that we had this quarter. So I'll start with saying, we had a very red quarter. Or most people have very red quarter. Let me show you the numbers. Okay, so S&P was down since the last quarterly update. This was about May. It's down another 3%, Nasdaq another 3%. Bitcoin and cryptos, my gosh, it cannot get a break. Yeah, and this basket really pros I'm just tracking is down as well. So we're up slightly, which is great. It's not bad. But we take what the market gives us, and if it can get better, we hope we get better. Okay, so yeah, I wanted to cover this because even though we're up like 1.86%, this drop here would have brought us a below 5% drawdown for the year. So it's actually 2.4% drawdown, like in just a very short amount of time. In fact, I think just 3 weeks ago, this was up below, drawdown was less than 5%. So the market, I wasn't expecting it to be this choppy, I guess. But on the other hand, we have plenty of cash and we are positioned correctly. So we have to take the swings with the market and take it as how we go. Okay, so I'm going to start with my favorite part of the segment, which is China. I am very invested in China, and we have it's doing terribly for our portfolio. So these are our stocks right now. We have Alibaba, we have Tencent, and we have this ETF, right? And China has just not been great. Like if you look at the performance of China, had this like recovery somewhat in like June, July, and then it just came all the way back down to to a point where we're like, did the rally really happen? So because Alibaba is such a big part of our portfolio, I think this is nearly 10% of my portfolio. And then Tencent's 5%, and this is another 5%. We're very heavily invested in Chinese portfolios. So am I concerned about this? The answer is probably not. The thesis still holds true. So what's our thesis? If we look at the Changing World Order by Ray Dalio, so if you don't know who this is, it's the world's largest hedge fund manager. And he talks about like how China has taken a beating because of the COVID and their but having said that, they are actually doing stimulus. So you can see here they're actually doing some kind of stimulus. And because they have not as much credit in the system as, let's say, US or Europe, they actually have the ability to print more money. And this is going into the future as well. They have very little in terms of US debt versus their actual holdings. So because of that, they're able to kind of cushion themselves from the fall. So if you want more details on that, there's actually this great video by this YouTube channel, Money and Macro. He talks about the the Chinese economy not collapsing because of the debt bubble and all that. So one of the reasons why the market is not doing well is also because the sentiment is very bad. A lot of people look at China and say that, it's terrible, the economy is going to collapse, and evidenced by this, right? So you look at YouTube, look at all these like thumbnails, like China's going to go bankrupt and, we're going to die and it's going to be horrible. But as you hear someone who has a PhD in economics talk about it, we actually are still quite okay. So sentiment is bad, but there's still room for the country to grow as a whole. And if you look at the valuations of China right now, this is again a broad basket. You can see that China's PE ratio is 13.06. And this is the same it's actually slightly lower than Jordan and Mauritius and slightly higher than Malaysia, who have their own problems, right? And this is actually 65% of valuation of the US. So US is much, much higher. You can see that China can be slightly undervalued at this point of time. A lot of geopolitical tensions, especially Russia, the recent like oil stuff going on, Nord Stream. So China's taking a beating. But am I concerned about the thesis? The answer is no, because we're going to hold it for a while until this kind of corrects, and then we will evaluate from there. So even though we hold China, having said that, we do hold like good quality companies. And the way I define good quality companies is we use something called a DCF analysis, which is a discounted cash flow analysis. And this is our largest holdings, Alibaba. And the reason why I'm so bullish about it is, I can give very conservative estimates about how they're going to grow. So I estimate they're only going to grow at 4%, but I can require a 10% return from them. That means every year, I'm kind of losing 6% growth, but it's still undervalued. So given very conservative estimates from an academic point of view, I can see that, the stock is technically still undervalued from this DCF analysis. So that's kind of why we're holding more BABA, and we will continue to hold it until maybe it reaches this level. Then let's see how we go. But yeah, fair value is 131. We are averaged in about 123. It's trading about 90 something now. So we'll see how we go. And again, these are very conservative estimates. Realistically, this should kind of be growth rate around 6-7%. So, we are taking very conservative estimates. Okay, same thing with SIMO, which is another one of our gigantic holdings. It's like 5% of our portfolio. This one is really amazing because it's trading at 72 at the time I prepared the slides for this, right? And if you look at the stock, the stock itself, it's actually going to be acquired. It's going to be acquired at $114, and this is estimated to be next year. So it's trading at 72. It's going to be acquired at 114. And let's just say it doesn't get acquired. Let's say the acquisition fails because of China anti-law or antitrust or whatever have you. We can see the academic valuations, the same estimates I used just now for Alibaba, and I made it worse. I had a 12% required return discount rate, right? And it's still 14% undervalued. So it's going to be acquired. And if it doesn't get acquired, we're still holding a great stock at kind of cheap valuations. So I'm not worried about this either. Reason why SIMO is down even more is also because if you think about semiconductors, it's really not been the flavor of the month. So a lot of people just rotated out of it. Intel, Nvidia, and all that are all down. So this is kind of one of the reasons. Okay, and yeah, I just wanted to show this chart. So between this price and this price, what has happened? Fundamentally, nothing has happened. This is just market sentiment, just trading, right? And when they announced the kind of acquisition, this was kind of what happened, right? This spike right here. And now you can see that, it's come all the way down. It went all the way back up. It's come all the way down again, but with no real reason why other than market sentiment and, all that. So I'm not worried about this stock either. I'm not worried about most of the Chinese stocks that we have in our portfolio. So even though it's been a real drag on our portfolio, I'm still okay holding it for the long term. Okay, the next biggest drag on our portfolio is cryptocurrencies. And yes, it's really been terrible, right? So let's see. We have dropped from the all-time high. So this is like Ethereum, right? 4,800 all-time high. You see we dropped about 81% to the low, the trough here, and now we're trading about today we're trading about 160. So it's still dropped. It's still much lower than what it should have been. Sorry, not what should have been, but it's dropped significantly from the all-time high. So question is, will we, go back to even half the value? The truth is, I don't know. We look at one of the reasons why people are not investing in cryptos is Ethereum merge. It's a huge question mark. There's a lot of uncertainty around it. Will stake ETH holders like suddenly flood the market with Ether and the price will drop? Or will people like, oh, the uncertainty is gone, so now we can buy back in? Answers, I don't know. But I do think it's undervalued at these levels. And also reason being is you can see that, this is the DeFi market, right? It's dropped significantly from its total lot value. It used to be like $200 billion. This is including Terra Luna, the giant blow up, and now we're at 59. So if you go back and look at these kind of price charts, even if we get the kind of leverage we got previously, which I don't think we will, we'll probably go back to the all-time highs. But, having said that, if the leverage is no longer in the system, people are a bit more scared. Can we get halfway? I don't know, but I do think we're undervalued. And you can see NFTs. NFTs have dramatically dropped, like in terms of the amount of sales that's going on. So Ethereum runs a lot on, depends, I guess there are a lot of NFTs minted on Ethereum, like Bored Apes and CryptoPunks. So now that sales have kind of dropped, volume has dropped, floor prices are kind of there. I don't know when the next driver of cryptocurrencies is going to be, but I do think it's undervalued, and I do think we'll reach all-time highs. The question is when, and I don't know. But does it deserve to be 80% down? Probably not. Maybe 50, 60% down. Reasonable, right? So if it reaches 50, 60% down, we actually have a decent amount of upside, which I think is great for our portfolio. So it's not a significant part, but certainly a gigantic drag on our portfolio. Okay, next thing, energy. Energy has not turned out well for us. And that's surprising given what happened over the weekend with Nord Stream again. And I prepared these slides over the weekend, so this doesn't reflect kind of Monday and Tuesday's price action. But we can see here that one of our bigger holdings, 5%, is in uranium. And our thesis behind that is if we really want to move to green energy, we're going to need intermediary. And the intermediary was nuclear. And you can see here, like France is going to restart all nuclear reactors. California says, okay, we're going to keep the nuclear plants running. I know some of you in the UK and Boris Johnson said, go nuclear, go large. And I know some of you guys don't like him, but not the point of this conversation. And, the articles coming out on videos coming out is nuclear making a comeback. So I think nuclear is really turning a corner in terms of sentiment. Like people were previously, like a year ago, like, oh, nuclear is dangerous and stuff like that. But now people are like, okay, we really need to look at nuclear because it's clean energy, and because, in between where we are now, which is oil and completely renewables energies, we need an intermediary. And I think nuclear is the answer. So I may be wrong, but that's the bet. And that's why it's 5% of our portfolio, but it's still down. So I can't really explain why. I think it's a sentiment thing. I really think it should pick up. And we'll see. I'm going to hold it until the end of the year. I've seen the things in my thesis come true, which is we do see people like becoming warmer to it. You can see some of these articles of September. This was over the weekend, so just a day ago, September, July, and this is August as well. So these are all pretty recent developments, and I'm hoping nuclear or uranium and all that will start picking up. Okay, so again, let's go back to oil. Oil is one of the things that's also big in our portfolio. It's not that I am not for green energy. It's just that there's this huge underinvestment in oil. And I show this slide every quarter, right? There's a huge underinvestment in oil. And because oil prices are going up, it's going to become more, how do I say it? It's going to be, you can turn on offshore rigs because those were previously unprofitable because of the low oil prices. But now offshore rigging should become more reasonable, and therefore they will turn back on those rigs and bring more production. And to me, that will benefit Transocean the most because they have the highest leverage balance sheet of all the oil companies, all the rig companies I've looked at, and they are still loss making, right? So one of the reasons why we thought this was the case last quarter is because there's this like huge drop off. This was, again, was in May, of the current month versus the future. So this is a futures curve kind of thing. So this is how all refiners and stuff, they use these oil futures to hedge their oil reserves and say, okay, I'm going to sell you in the future at a higher price. And you can see that this drop between the current month and 12 month, this was pretty steep. It's since flattened significantly. So actually you can see from this chart here, this has kind of was a significance of very steep curve, and now it's flattened somewhat. So if it's flattened, it means there's a bit more certainty in the market in terms of like where oil is going to be in like 1 or 2 years' time. So because of that, I think rig has really some pretty good upside to go. So that's why it's also a big hold in our portfolio, but it's underwater at the moment. Okay, and the last part of our thesis is that if all our ideas and all our thesis on this is correct, then Transocean should start making money, right? So they narrowed their losses last quarter and I expect them to be profitable by the end of the year. If they are not profitable by the end of the year, then I may have been wrong and we have to reevaluate the trade and may have to close it. Okay. Yeah, okay. Now I'm going to talk about the good stuff in our portfolio. So Encore Wire did very well for us. So you can see here that copper has come down significantly, but Encore Wire is actually up 20%. So the reason for that is it's just a very, very well-run company and has very high return metrics. This is where fundamental valuations really come into play, and having that knowledge about how to value companies is important. So even though copper has come down, we're up on this pretty good, yeah. So when I did the analysis on this, I kind of posted this in a Chase chat group because that's where all the popular investors kind of chat, right? And we gave it a fair value of 172. Currently, we're at like what are we, 126. And this is, remember those valuations I talked about just now? This is just absurd. 20% required rate, discount rate, and like minus 10% growth rate for the next 10 years. This is just ridiculous, right? And it's still undervalued. It's by a significant amount. So when I saw this company, I knew I had to get in. So we pumped in. Normally, I put in like 1% and then slowly stack up. This I just kind of went all in at one shot. So the reason why I could find these kind of opportunities is because you find something with very good valuations, very good return on common equity, return on capital, and things like that. So that's kind of how I found this. And this really defied the market, despite how copper is actually doing. This did very well. So we hope to find more opportunities like this, and if we can, that'll be great. But as I will show you later, there are actually very few. Okay, on to US dollar, which has done very well for us and is hurting quite a lot of people, especially if you're in Europe, right? US dollar has been absolutely on a tear. It's been going up a lot. And we benefited from a Euro US dollar trade, as you can see here. So we made about 1 to 2% of the portfolio. So 1.4K is about 2% of the portfolio. And this was quite off a 1 month holding period, so not too bad. And we are also long dollar Swiss right now. So this is up quite a little bit as well. So here's the thing, right? For US dollar, it has come a very, very long way. Like this is the dollar index, right? And it's come a very, very long way up. Is it sustainable to be at these levels? The answer is I don't really know. It certainly looks like it's going to be stronger for longer. Having said that, it's come a very, very long way up. So I'm a bit tentative about the US dollar being going a lot stronger. But I can say this for the Swiss franc especially, I'm very confident or more confident of holding it over the euro. And reason being is that I wrote this about the heads I win, tails you lose kind of play. So in kind of what do you call it, in Swiss franc terms, right? They actually have a very, very low interest rate, and US interest rate obviously is rising. So because we are buying long this currency, we're actually getting refunds every day for holding the currency, and this gets about 18% per annum. So we hold this for 1 year, just on interest, we should get about 18% if we do absolutely nothing, and the currency doesn't go anywhere. But if the US dollar goes up, we make extra. So this trade is kind of bananas, and I kind of like it. So I'm gonna hold on to this. Again, so I put the numbers here. If we are neutral and US dollar kind of doesn't move and we are still the same, in 1 year's time, we got 0.9% gain on portfolio. If we were correct and the US dollar strengthens, we get 1 to 2%. So that's great. If it drops, then there are certain things that we can do to kind of add into the position so that we can come out at least net break even. So I think the risks for this trade are quite low, given the type of upside that we can get. So I really like this trade. So that's why it's actually quite a decent chunk of our portfolio as well. So it's about 5 to 6% of our portfolio, but it's also leveraged 10 times. So leverage is not a bad thing, guys. It's just how you manage the risk after that. Okay, so yes, this is the dollar index that I wanted to show you. So this is the one just now, right? So this is how far it's come just this year. But if we look at it over a very long period of time, this is 2012 till now, the US dollar has not been this strong in a very, very long time. So this makes me very nervous. A bunch of things could happen here. And I don't wish for anything bad to happen, but it's come a long way. Okay, so this is again the Swiss franc. So we can see here that Switzerland actually has very low inflation rate and has very, very low unemployment rate. So in other words, there's no real need to increase interest rates in Switzerland. So that's also why we think that Swiss rates will kind of maintain here, increase slightly, but will always be lower than US. So that will help this trade. Okay, and then the next part is going to be the market outlook going forward for the next few months. Okay, so you guys saw the gigantic rally just a couple of months ago, and our portfolios recovered significantly. I think it's a 7% run or something like that. It was great, but having said that, I was listening to Charlie McGallagher. This guy's from Nomura, and this is from Macro Voices podcast. He was talking about how inflation, or more like positioning in the market, right, shows that there's very little people actually being long in the market. So when the market rallied, it's really because there were not many people not many people buying it either, but it was around the liquidity event, which happens to be inflation data, right? So what happened then was that because of something called options and gamma squeeze and dealer positioning and all that, we have very big rally. But it doesn't mean there was anyone buying. There's no one behind it. So because of that, I didn't feel comfortable adding to the position. And as you can see, the market has kind of dropped back to where it was. When we can kind of see people being more excited about the market, people adding into their positions, that's kind of when we know that, okay, now maybe we've hit the bottom and it's time to rally. But that time doesn't seem to be now, doesn't seem to be yet. Yeah, so this is adding more to that. So again, all this is from Macro Voices podcast with Charlie McGallagher. If you guys have time, go have a look at that. Okay, and yeah, this is a tweet that I saw as well. I think it really personifies what we're saying. So it's one of the most hated rallies in years because of literally no one's there on board the train. So you can see positioning here. And this is just futures positioning, mostly negative, except for the ECAP minis, but this is always a tiny, tiny volume. And yeah, because of that, there are not many people in the market. So it's hard for it to get any momentum. Okay, and yeah, this is more articles. Oh, okay, sorry. I know why this is here. Okay, so I did want to say that interest rates, right? Where do we see interest rates? There are a lot of people saying that the Fed is going to pivot, and Goldman says that don't be so confident of that. And I tend to agree. I don't think there's going to be a Fed pivot yet. And the reason is, if you look at household balance sheets, they tend to be very strong. So I don't have that here. I have it somewhere. Okay, I'll get back to it. But household balance sheets are very strong, and what we can see is, oh, this is a household balance sheet. Sorry, I am terrible. It's very late here. Sorry, guys. Okay, this is household balance sheets, and I took this from the Financial Council of the United States. You can see here that assets versus liabilities, household balance sheets are very strong, so they can take quite a bit of beating in terms of raising interest rates. So I do believe that we'll continue to raise interest rates until the end of the year. So this is the dot plots, which is how the Fed kind of assumes where interest rates are going to be. You can see here that by end of January 2023, we're going to see it be about 3.5%. And by January 2024, we see it about 4 before coming down. And this may or may not be true. I don't know. But I think higher interest rates are going to be here to stay for a while. And this helps our dollar Swiss trade, but it's bad for stocks. So good to be diversified away from US for the time being, because if interest rates stay these high, it could not be good for US companies especially. Okay, so we have a lot of cash, and the reason is because I've outlined those reasons before. We didn't add to the positions even though the market rallied. So I think we are going to continue to hold cash until we see signs that we are ready to go. Now it's 12.26%, but if you add the dollar Swiss, which I consider cash, because let's be honest, guys, I can sell anytime and it's cash, it's about 19%. I sold out of 2 positions yesterday as well. So this is now closer to 21%. So when the market looks like it's ready to recover, we'll add more to position. I think the last time I had this call, we were closer to 30% cash. So I do see that, there are more opportunities as we go, like Wire. But, we're going to be conservative as we approach this market. Okay, so I mentioned just now that finding companies like Wire is like finding a needle in a haystack, and this is the reason. This is the screener that I have on Seeking Alpha. There are only like 5 companies here, right? And looking through all of them, one is not even available on eToro, and that's not eToro's fault. They can't be everywhere. One is in a couple of them are energy companies, which I'm not comfortable with the good macro picture of it. You can see Petro Brazil. I'm not very comfortable with that either. So it's very, very thin market. There are not that many great opportunities in terms of valuations, but when we find them, we will buy them. So out of the 5 here, if I'm not mistaken, 4 I'm not comfortable with. Oh, sorry, 3 I'm not comfortable with. 1 I couldn't find on eToro, and 1 we already own, which is on CoreWire. So finding these valuations, it's going to be a challenge, but these will really add significant upside to our portfolio. Okay, and life updates. So I've had so much pushback about deposits, so I'm going to make it simple and just not going to do it. Okay, until we can kind of find a way to deposit without interrupting anybody's life, I will just not do any deposits. What I will do though is I will mirror whatever trades that I have on eToro on a different platform, and hopefully be able to show that to you guys. So one of my personal projects I've been working on is this website called Not Advice Financial. It's a passion project of mine. It's built on blockchain. But it's basically that, one of the reasons I find it very hard to push my passion of eToro onto other people is because there's so many YouTubers out there telling you how to 5x your money, and most of them is crap, right? So I can't compete with that because they're lying. So how do I prevent them from lying? I just verify them. So this is my passion project. I won't talk too much about it. I think it's still in beta, and we're still testing and stuff like that. But yeah, this is my passion project, and I will use this to reflect, what portfolio I have in eToro, and show it to you guys. Okay, and that's it. And any questions? Let's see. Okay. Okay, no questions. Great.
Okay. this is okay. I guess if no one has any questions, we're done.
Yeah,
Zach?
pretty much. Yeah, we're good. We're good.
Okay.
If there are no questions, we're done.
Okay, great. Thank you very much, everyone. And thank you very much, Zach. It was fascinating. Thank you. And we'll see you all next quarter.
So
Bye
thanks, guys.
bye.
We appreciate it.
Bye.